Hello traders and welcome to the market opening preview, October 23rd, 2014. Great to be with you traders, coming to you live from Pattaya, Thailand. Overcast skies, a little bit of drizzle out there. Not a beach day today, my friends. Time to stay in the office and hopefully make some pips. Traders, this is brought to you through FXCL Excellence in Trading. Again, great to be with you. Remember, we're with you every single day before the London Open. Traders, let me introduce myself to you. My name is William Gilday. I'm your moderator for the market opening preview every single day, and also for the Friday wrap-up. And we do that about 4 or 5 hours after the New York close. And that's because I'm coming from Thailand, and I wait till about 6 in the morning to start the Friday wrap-up. Traders, I started trading in 2006. In 2008, I retired from a wonderful career as a public safety officer in the great state of Florida. Got on an airplane, came to Thailand for a 3-month tourist visa on a holiday. Well, traders, today I'm still here and I'm loving life. Loving trading the Forex market every single day. Don't necessarily take a trade every day, but I am in the market every day. And it's really great to be with you every day and be able to provide you with this information. Let's go over to the legal stuff. Forex trading has a large potential rewards, but also a large potential of risk. So therefore, you must be aware of the risk and be willing to accept them in order to invest in the Forex markets. Please, traders, do not trade with money you cannot afford to lose. Remember, traders' past performance of any trading system or methodology is not necessarily indicative of future results. All right, that's the legal stuff. Let's talk about some news and commentary. What do we have coming up in the news today? It looks like in the London session, we have German manufacturing PMI, which is high impact. And what else is going on in the old calendar? U.S. has retail sales month on month, high impact. A lot of medium impacts out there, so keep your eyes open. And that looks like those are the big ones. I was just going back up a little bit. I wanted to see why the New Zealand dropped like crazy. I'm going to show you that New Zealand chart. But New Zealand CPI quarter and year-on-year came out. And they were both bad numbers. And wait till you see these New Zealand charts. Big red candles on there. Also, in Asia today, we did have, out of China, HSBC manufacturing PMI. So there was some data in Asia. Unfortunately, I did miss it. I have had an internet issue. However, it is taken care of. So let's go over to the markets and see how we closed overnight. The Dow 30 closed at negative 0.92%, the S&P 500 negative 0.73%, and the Nasdaq 100 at negative 0.55%, with the Russell 2000 at negative 1.44%. Going over to the Eurozone, looks really nice. The DAX closed up 0.060%. The FTSE was up 0.43%, and the CAC 40 was up 0.58%, with the Eurostoxx 50 also up at 0.46%. Traders, let's come on over to Asia, and let's take a look where I'm at, and let's take a look at the markets that are currently trading. So we have the Nikkei 225 is down 0.27%. The S&P ASX 200 out of Sydney is negative 0.17%, with the Shanghai is negative at 0.25%. The Hang Seng is down negative 0.26%. And the Kospi is also down negative 0.34%. Traders, all I can say is, you're going to have to watch your data. Data is really moving the markets. There's a lot of volatility in the markets. These currency pairs, as you'll see in the charts, are swinging, 20 and 30 pips one way, and then they'll turn around and totally go in the opposite direction with or without data. So my commentary is trade what's in front of you, trade the time frame you're on, or if you're trading Renko bars, don't change anything that you wouldn't do on a candlestick chart. You want to make sure that you're doing support, resistance, using your Fibonacci tool, and just be really careful of what's going on out there, and keep an eye on your economic calendar all day long. Even medium impact and low impact statements are making big moves in the currency markets. All right, traders, let's head over to the 60-minute Forex charts, and we'll start with the euro. This sold off really nicely yesterday, bounced off the 200 exponential moving average, and I don't know why that chart is cut off like that. But anyhow, basically we're looking for the pullback to the 2674 area, and we're just going to take it back down to support. It's not a big trade. We're not looking for 6 or 70 pips. We're looking for like 25 pips or something like that, and we're going to get the heck out of it. This is at support. Not quite sure what it's going to do. This can break this. This doesn't necessarily have to pull back. This just can continue, especially with data coming out later in the day. Here's our pound dollar. This is a little tricky here because we have the 200 exponential moving average at 1.6081, and then we have a trend line, which is a 3-touch trend line, so that is valid. And the pound is bearish, so we want to break the trend line, get a bearish candlestick formation at 1.6029, area, and we want to sell this. I would fib this again after you get that candlestick formation and fib it and look for your 161.8 Fibonacci level for your take profit. And you know what? No, they are different charts, I promise. But take a look at this. Here's the Aussie dollar. Same situation. We got the 200 as resistance, and then we have a trend line. That's a nice 4-touch trend line. And again, same situation. We want a bearish candlestick formation, and we want to take this down. And I would fib this and get our 161.8 Fibonacci level and take profits from there. There's nothing left of the charts to look at it if you expand this chart out. You could go up to a higher time frame. These are 1-hour charts, so you could go up to a higher time frame and maybe get a support area where you would look to exit your trade for take profit. But we are bearish as of right now. Now, remember, on both these trades that I just talked about, the pound and the Aussie, if they get above that 200 exponential moving average and they close above it, these trade plans are out the window. You have to do a totally new analysis now and find out what's going on and rethink what you're going to do. If it just mingles around the 200, just don't trade. Just don't do anything. All right. Here's the euro yen. Euro yen's looking really nice. This was a nice trade setup. We're just waiting for it to come back up to the 38.2. The trade yesterday did not work at all. But this one looks really nice to the downside. We'll get to that 38.2 at 135.88. We'll just take it down to the 161.8 fib, as you know I love so much. And that's basically the 135.00 area, 135.08 in that area. And we'll get the heck out of there. So this looks like a really nice pair to watch today. Really liking this euro-yen pair. So keep an eye on that. It's really nice stair-stepping, just a good-looking chart. All right, here's the euro-Aussie. Again, same as euro-yen. Nice stair-step. You can see where you get accumulation level, then it drops and accumulates. In other words, it goes sideways, and it drops. Now it's coming back up. We'd really like to see this get above that 50%. I don't know if that's going to happen, and that's okay. If it just goes to the 50% and gives us a bearish candlestick formation, you know what? Just take the trade. The other thing you do is stick a trend line on those candles right now, and if it breaks the trend line, just take it down to the 43.78 area and grab your 15 or 20 pips and get the heck out. You don't necessarily have to wait for it to get all the way back up to the 38.2. If you get an opportunity, that's what this is all about, opportunities and probabilities in our favor. So that's what we're looking for. But I'd like to see this pop up a little bit, and I don't like these big wicks on the last 2 hourly candles. And I just took these screenshots within the last half hour. So these are new candles. So, basically we have almost 3.5 hours before the London Open. But something to definitely keep an eye on. Trades, the last one of the day is the New Zealand dollar, and this was the New Zealand news that came out today, and that's why this absolutely just pounded down to the downside. Nothing we can do. We just got to let this sit and wait itself out. I put where we can basically wait for the pullback to the 61.8, but we don't know what the New Zealand dollar is going to do after that bad data. This can continue to fall, and if it does, we'll just wait for a retest, and then we'll just take it to the downside. You can put a trend line there, see if you get a bearish candlestick formation. If it breaks that current support level at 0.7838, you know what? Sell it. But I'd much rather see some kind of a pullback, some kind of substantial pullback, like maybe to 78. I don't know. Even if it went to 65, would be better than where it's at right now. So anything's better than where it's at the current moment. So that's New Zealand. Pretty interesting how this is going to react, and we'll see what happens. All right. Traders, I'd like to thank you for joining me. today. My name is William Gilday, and I'm good friends at FXCL. FXCL Excellence in Trading. We wish you a great trading day, and we hope to see you tomorrow. And remember, traders, this is brought to you every single trading day before the London Open. Traders, have a great trading day. Grab those pips, and remember, trade smart and not hard. Coming to you live from Pattaya, Thailand. Rainy skies. Catch you next time. Bye-bye.